Okay, here in the 6 steps to success, we'll start to put all this new information together to find a high quality setup. So the first step is to look for a sufficient range on the chart. Here we have something like 35 points and we want sufficient bars to be able to read the chart. If that was 10, 12, 13 points and we got something with a 1 point spread, that's too small a range to trade. Obviously the range available and the amount of bars in that range are directly proportionate to each other. That is why we work hard on getting the correct size chart for the current activity. Then we look for the current location of our swing low to ensure that it is over square. You see here is our low, here is our square line. The combination of buyers and sellers and offers have pushed the price that far to the right. If that low was inside here, we would not consider this as high quality setup. Just a very quick note for the observant of you, maybe you've noticed that this here is a potential entry setup. It is covered elsewhere on the site, but we do not take entries inside this 25% area inside the square. We would take that if it was above here. We don't take it when it's in this area for this very reason. Okay, so now we're looking for the final confirmation for entering a trade. We've got our swing low over square. We're now looking for buyers equaling or beating sellers. You can see they've done that here. We're looking for speed of buying transacting to be increasing. We see we have confirmation down here. Entry inside last square goes across here like that, so we don't have a problem with there. Entry inside predicted target angle is going up here, so we have our entry here, so we don't have a problem there, and we have plenty of predicted range to work with. Obviously if this had taken forever to give it a signal and we're up here somewhere and we're giving away too much of our potential profit, we would seriously consider not entering that trade. So we've opened our trade, we've got all the signals we require, and we've entered the trade. Now we manage the trade according to what it achieves. As long as price stays above our predicted path, we don't have a problem, we just let the price ride. The only area of concern we have is obviously the last swing high. Now if price comes across here and gives us an exit signal around the last swing high, I like to make a pivot point at the last swing high. The other key point is waiting for 50% of predicted volume. Otherwise, this trade just moves on up. We have our predicted target. We reach our predicted target slightly ahead. Then we come back to our predicted target. We take our profit, and then we wait for the market to unfold and assess from there. If we didn't take our profit there, we would have been exiting here with an increased selling speed. If this trade didn't make its predicted target and the price turned over here somewhere and started to go down, we would exit on our reverse signal, which simply would be selling beating buying with increasing speed down here. It would also have to be inside the last square, and once we've taken that exit, we would then assess what the market achieved in comparison to what it was predicted to achieve. Again, if this swing high had come up here and turned over, it should have went to there. So the achievement is weakening, and then also we identify where the trade came from. This is a high quality strong setup because we've had a very low retracement into the range that was available, and we've had a strong move up. So we've actually, on this move, we've actually achieved greater than predicted price, and we've come from a position of strength. Each one of these 6 steps described so far are described in far greater detail in each section through here.